we're going to remain very accommodative for quite some time, in all likelihood a number of years. But the mix of tools that we use can change, and that's where the tapering decision comes in.
You said, though, that the tapering decision is going to be based on two things. One is when the economy is ready, and one is when the market is prepared. What does that mean, the market is prepared?
Well, I think we have been trying to get across a couple of points that are very important, and the market may or may not actually, to the extent that there is a mind of the market, actually buy into these points. One is that there's a distinction between the rate policy, the targeting of the federal funds rate, and the asset purchases. Those are two separate tools, and they're not tied together. When we make a move on, for example, on asset purchases, it is not necessarily signaling that there's any change in the policy for the interest rate.
Right. In other words, tapering is not tightening is the message of the Fed.
Point. We've been trying to put across that view, and it's not been broadly accepted, certainly not as you look at some of the reaction in the market to either the minutes or to discussion in the public about the possibility of tapering. But they are two separate tools. We have a mix of tools. We can put together, I think, a mix of tools that will preserve the very accommodative stance of policy for quite some time.
Hey, Dennis, this is Tom. Appreciate you being on this morning. Great to see you again. You know, you and I have had this chat before about value as a function of risk and return and how the Fed thinks about that relationship. We've talked a lot in Joe's commentary about the risk side. In other words, how do we feel about growing the balance sheet and how do we unwind? Give a little more insight on the return side. In other words, GDP growth. In other words, unemployment when we're really facing significant underemployment. How do you think about those?
The way I think about this, the way I think about it is you know, there's a cost and a benefit to any policy, as a matter of fact, and there are winners and losers with any particular stance of policy. So with quantitative